Growth is very difficult when you're starting with an economy that has a lot of structural issues, lot of infrastructure, outdated infrastructure. We also have crime as a big hindrance as well, and I would say that's a big problem to solve. We have not, over the last several decades, been able to grow our export, our industries that can actually export more. So when you look at the input that is going in consumption, most of that is imported. So when you look at overall growth, you build crime into the picture, overall growth in terms of export versus import, or to use a technical term, trade balance. We still have negative trade balances. So as a consequence, our growth is not able to manifest itself. But again, the way I think about things is in stages. For the better part of this decade, and a lot of people forget that, Jamaica debt to GDP was at 140%, which basically means we have budget deficit and a lot of difficult periods. The government went through difficult periods. There's no money being spent on infrastructure, education, and other social areas. Interest rates were high, which mean projects that could have been viable could not be invested in. So I think that we have to be very patient and also be strategic in terms of understand that we have gone through the last couple of years where we have macro stability. The last 2 or so years, we start having a low interest rate environment, and we start having a renewal of our infrastructure. So with that platform, we should now start thinking about how do you actually transition the economy from just a stable economy growing at 1% and 2% to a growth economy. And that's the work that we have ahead. When persons sit and talk about 3-5% growth without understanding the process that we have gone through to get here, we are sort of being too excited too early.
There's forecast for another global recession. From where you sit, do you see that happening? And how do you think Jamaica will fare this time around?
The question you asked me if I see the recession happening, global recession, that's a difficult question, right? But what I would say is that if the experts in America and Europe, and even some of our local experts, meaning economists, who are looking at the global space, tracking it all the time, and they are predicting some slowdown, and then of course I will always go with the expert view. From my point of view, if there's a slowdown in the US economy, then what we should do is start thinking ahead about how will that impact tourism and investment into Jamaica, as well as export in terms of businesses that are doing exports. So I think 2 things. Looking ahead as a country and as business leaders, we will already be thinking about if there's a recession, what does that mean for us? What strategic decision do we need to take? Obviously, as a country, we need to think about that as well. What strategic decision do we need to be taking, especially when you think about tourism as an industry, cruise and stopover visitors, as well as investment coming into Jamaica, or even as a country, how much do we spend on certain capital program when a recession could be looming? So these are data that we should use to our advantage and plan properly to mitigate the risk of a recession. The Fed, obviously, in the US is taking action to try and avert a recession, so we will see.
Comparing 2008 with a possible one now, do you think Jamaica is in a better position to withstand?
No, and that's why I started very good question. That's why I started my discussion about growth by talking a little bit about the context of Jamaica. When we talk about 1% and we are a little bit disappointed about 2% growth. And that's coming from a context where for 25 years we didn't grow above 1%. And for before the IMF agreement, we were 140% debt to GDP. Jamaica was extremely vulnerable during 2008 and prior to that, extremely vulnerable. We had to go to IMF because we ran out of NIR. Today, we are in a much better place. We are on a good trajectory. We have NIR, we have low inflation, we have low interest rate, and most of all, our debt to GDP is below 100%. And so we are in a much better place today, and we should be able to, as I said, plan properly and manage ourselves effectively through any recessionary slowdown. It's part of life. It's part of doing business. We go through business cycle. Economies go through economic cycle, and the key thing is just to plan around how do you manage our resources to get out of those cycles if they should ever come. Recession by nature means a contraction in economic activity in any economy, and at the end of the day, the way Sygnus thinks about business is that business cycles, including recession and booms, are state and nature. That is the environment. So what do? In any environment, there will always be opportunities, and there will also be risk. So if the economy should slow down, we believe that we have a strong enough team, we have a very strong value proposition in terms of our non-traditional financing platform to actually find the right opportunities and do well, or let me say, continue to do well within that environment. If there's no recession, obviously everybody will do well. But at the end of the day, I feel that Sygnus has a very strong team. We will assess the environment, we will look at the risks that we are taking, we'll look at our niche market that we play in and try and make good investment decisions while we go through that type of cycle.